Hello, afternoon. I hope you are all fine. Welcome back to Acct Media. And in today's session, we are going to talk about cost and management accounting, and we'll be on the topic accounting for labor. So this is what we are going to cover. We're going to cover labor costs, which will include direct and indirect, payroll accounting treatment, remuneration methods, labor-related issues. All right, so our topic for today is accounting for labor. So at the end of this session, we will deal with payroll accounting, computation of gross pay, method of remuneration, labor cost accounting, accounting treatment for idle time or overtime, annual leave, holiday, employment cost. We are also going to talk about labor-related issues and then labor turnover. All right, so basically, the cost of a product will basically include the labor, because labors are those individuals that convert the raw material into finished goods, right? So the cost of the labor will basically be included um in the cost of the product. So this will include direct and indirect labor cost. So the direct labor cost can be traced to a particular cost center or a cost unit, while the indirect labor costs are not traced. So basically, what we mean by direct is that direct is the type of or the kind of action that is really needed for that product to come into existence. But the indirect, even if you don't do it and you have direct, the product can come into existence. All right. So it must be noted that the cost of labor, which is included in product cost, is part of employment cost of an organization. Employment cost is the total cost incurred on all personnel that the organization has contract of service with, which establishes master-servant relationship. Those personnel are referred to as employees. So employment cost is computed from the condition of service of the organization, which are made up of remuneration, which consists of salaries, wages, and allowances, then fringe benefits, which is like other benefits like free medicals, free accommodation, transport, utilities, and the likes. So in accounting for labor cost, that is to be included as part of product cost. Only remuneration is considered. The cost of fringe benefit is considered as a period cost. So accounting for labor, therefore, is the procedure and method that will generate or into brackets compute labor cost information. So it comprises the following: how the employee's remuneration is calculated and paid, that's the payroll accounting, and the accounting treatment of the employee's remuneration in the books of accounts, that's labor accounting, and other labor-related issues. So payroll is basically a document that contains the details of the employee's remuneration. So when you go into an organization, each an employee are enrolled on a payroll, right? So on the payroll system, you are going to get the details of each and every employee's remuneration, right? It broadly contains the following: the gross pay. The gross pay is basically um, consisting of the bonuses, the allowances, and the basic salary. Right, so the basic salary will be there, plus any other bonuses, any other allowances. That will give you your gross pay. So now you have a deduction. Deductions can be statutory or non-statutory. So the statutory, that's the deduction that is required by law is the statutory, which includes taxes and social security funds. And non-statutory deduction, which includes welfare, social class, right? For the non-statutory, it is not voluntary. It's not by force, right? You can choose to pay or not to pay. That's it. And after deducting all your deduction from your gross pay, you're going to get your net pay, right? So the net pay is the difference between the gross pay and the deduction that is payable to the employee. So the basic salary, this is the basic remuneration that is paid to the employee. An employee could be paid hourly, right? Paid according to hours worked, piece rate according to output, and then salary according to skill or grade of employee. So on the hourly kind of um, so on the hourly kind of payment, there is a rate that is to be paid each and every hour, right? So once you work any hour, you are being paid, if let's say 10 cedis per hour, then 10 cedi per hour. So if you work, let's say 24 hours, then it's going to be 10 times the 24, right? So that's it. And then the rate is also based on an output that has been produced. If let's say you are being paid 1 Ghana cedi per hour, right? And you bag and you produce, let's say, 1,000. And 1 times 1,000 is going to give you your piece rate, your total basic salary based on the piece rate method. And then the salaried worker on a grade means that it's based on say, there are some grades of salary workers that receive a fixed. So anyone in a particular grade will receive the same amount of basic salary or basic wage. So we also have allowances. These are other payments other than the basic salary. It is computed from an existing condition of service, which an employee is entitled thereto. So some of them include bonus. It can be individual or group bonus. Then overtime, when you work more than the expected time. And then leave allowances are also there. And then other specific or unique, like others specific or unique to also each and every organization also have their other kinds of bonus, right? It can be based on you bringing more people to the job site to purchase or the likes, right? So the source document to compute gross pay. The document may be in the form of paper, electronically, in the form of scanning, using barcodes, entries on terminals, automatic counting, etc. The documents include the following. We have clock card. The clock card is simply a step card that is inserted into a clock at the gate and the time of insertion stamped. So basically what this means is that with a clock card, you are going to insert a card into the clock whenever you come to work. And then the time that the card was inserted will be recorded. And then when you are leaving you are going to insert that card and then it will also be recorded. So it will record between the time you came and then the time you left. So this is basically used for the hourly or um, the hourly work rate, the hourly work. And time sheet. It is a sheet detailing the employee's activities and time spent on each job. Each worker fills it. It aims to reconcile all the time in attendance recorded on a clock card with time bookings to job or operations. So basically, the non-other productive attendance like machine breakdown, it can be kept. So basically, what this does is that aside you clocking in, you also have to write on the timesheet to cross-check what you place in the clock card, whether everything is correct. Then job card. This is a card made out for each job. When an employee works on a job, he records on the job card the time spent on that job. Unlike timesheet, which is made out for each worker, job card is made out for each job and they're therefore likely to contain entries relating to numerous employees. So the piece rate work. This the piece work ticket, sorry. This is a ticket that records each piece worker's production or output, right? So this is self-explanatory. We also have personal employment record. This record contains the remuneration details of the employee, which is the rate of pay, the statutory deductions, which can be the pay as you earn, insurance contribution, pension contributions, and the likes. So the non-statutory can be social club contributions, welfare contributions. This one, you decide to do those contributions. Conditions of service. It contains remuneration and fringe benefits available to the employee as entitlement. So this is an example of a pay slip, right? So basically, this pay slip contains the grade. So this is more or less like the salaried one. So the grade, anyone in this particular grade is going to take this as a basic salary. And then this is the other kind of bonuses that they are going to receive, and then that's it. So remuneration is the reward. As you know, remuneration is the reward for the service provided by a labor. So what you receive for your service. There are three basic methods for remunerating labor. You have the time rate, piece rate, and then salary scale. The time rate is when you are being paid on timely basis. Can be hourly, daily, weekly, yeah. And then the piece rate is basically on output, what you've produced, the number of units you've produced. The salary scale is what based on the grade. So that's the same thing here. Explain this. So it is calculated as number of hours worked times the rate per hour. Then the time, this system is used where quality is more important than quantity. So for example, where you are working as a teacher, right? You cannot be paid based on piece rate or quantity or number of students or whatever, as you are being paid based on the time you are teaching, right? So we expect quality more than quantity. Work is such that there is no basis for an incentive scheme or like a watchman to watch over you. So rate of production is outside the control of employee. Example, oil refinery. So it is used where output cannot be measured quantitatively, especially a cleaner or teachers and the like. It is used where there is close supervision, where close supervision is possible. And then where worker is an apprentice or a learner. So advantages. It is simple. The system is simple and simple to operate, and wage calculation is easily understood. And it gives assured wages to workers and therefore a security to workers. Quality of work is better as the method lays less emphasis on quantity, right? Disadvantages. All workers are paid equally with no distinction for efficient and inefficient workers. It needs extra supervision to avoid waste of time by workers. Additional supervision is an extra cost. And then it may also result in low production as workers are paid regardless of output. Even when there is light out and you are not doing anything, right? You are being paid. Then we come to the piece rate. So under this rate, this is where you are being paid based on what? An output that you produce, right? So rate per unit production is determined or fixed, and the wage is calculated as follows. So the rate per unit times the number of units produced. This system does not give any consideration to the time taken by the worker in completing the work. Only quantity of work is taken into account in calculating wages. The system is suitable in the following situations, right? So where output of workers can be measured quantitatively, where production is standardized and repetitive in nature, where job does not require close supervision. Right? Because people want to produce more and they earn more money, they don't even need supervision, they will work. So variants under the system. So we have straight piece rates. So for the straight piece rate, wages are received by workers based on the number of units produced, right? So based on the number of units you produce, you are going to receive um, a particular wage. Then piece rate with guaranteed day rate. What this means is that there will be a normal day rate there, like let's say 100 cedis a day, right? But when you're able to produce and then you reach more than 100 cedis, like let's say 120, then you'll be paid on the 120. But when you work or when you produce and you are not able to reach, let's say 100 cedis, but you reach like let's say 80 cedis, then you'll be paid that 100 cedis. So that 100 cedis become your guaranteed day rate. You can either be paid above it, but you cannot be paid lower than that. Then the differential piece rate. This is more like each and every quantity you produce, there's a particular um, rate attached to it. So let's say when you produce your first 100 units, you are being paid 2 cedis. Your second 100 units, you are being paid 4 cedis. Your third 100 units, you are being paid 5 cedis. Right? So that's how the differential also works. So straight we say this variance is so calculated as the rate per unit times the number of units produced. Wages are received by workers in direct relation to the amount worked that is spent. Each unit is converted into a standard return. Hours are mainly. So this is an example of it. All right, so after all piece work has been converted to hours, they are aggregated into piece work hours and multiplied by the rate. So the let me start from here. The use of hours is applicable where units are varied. Each unit is converted into the standard or piece work hours. The hours are merely a device for measuring the work content of the similar items. The hours are not equivalent to the actual clock hours. After our piece work has been converted to hours, they are aggregated into piece work hours and multiplied by the rate. So basically what this means is that this time permitted being work is going to multiply by this output and then multiplied by the rate. So this 1.8 times 300, then 1.5 times 150, then 2.2 times 100. Then you are going to multiply all of them by the piece rate, piece rate per minute. So per minute is 10 pesos, right? So this is what you are going to do. So this is how it's being solved here. We multiply them and then they added all of them, then we multiplied by the piece rate. So that this is the gross wage, which is 998.50 pesos. So piece rate with guaranteed time rate. This variant combines the advantage of time rate and piece rate. I've already explained that when you when there is a guarantee time rate of let's say let me use the basic salary. So let's say 80 and then you work 100, then you'll be paid 100, right? But if you work less than the 80, then you'll be paid the 80. That's what it means here. So for example here, I think that the time rate per an hour is 40, right? And then the piece rate per unit is what? 80 units. So 1.25 per unit, and then you produce 80 units. So for here, your normal rate is 40 hours. So when you multiply 2 by 40, you're going to get 80. And then when you multiply 1.85 by 80 units, you're going to get 100. So meaning you're going to be paid 100. If in case this was, let's say, 20, then you're going to get, if the hours was 20, then you're going to get 40. And then your time, your piece rate, which is the 1.25 times 80 is going to give you are going to be paid still the 100. But if in case, let's say you produce, let's say 40 units, right? Then you are going to get, let me see, you are going to get 50. So 50 and then 2 times the 40 here is going to give you 80. Then you are going to pay the minimum one, which is the 80, right? The guarantee minimum. So basically, it was solved here, right? So earnings per piece rate this year, per time rate this year. You can see the piece rate is bigger than the time rate. So you are going to pay the piece work rate. Then assuming 40 units were produced instead of the 8, then you are going to get what 50 as the piece rate, and then your time is still going to be 80, then you'll be paid the 8. Then differential. With this variance, piece work rate changes at different levels of efficiency. That's what I use as an example, that your first 100 units produced will attract different rates, and then your second 100 will also attract different rate, then your third 100 will also attract different rate. So with this one, for example, look at this example here, right? So 1 Ghana cedi for output less than 100, so 0 to 99, and then 2. So let's say you produced 300 units. Let's say you produced 100 units, right? You say, hey, sorry, 300 units. And then they are saying that your first 100 units, hey, 0 to 99, sorry, is equal to 1 Ghana cedi. You'll be paid 1 Ghana cedi. Then from 100 to 149, you'll be paid 2 Ghana cedi. Then from 150 to 199, you'll be paid 3 cedi. Nice, also. No, so it's 126. 126. So since it's within 200, let me change this to 400. So right. So because of this, it doesn't mean that you are going to multiply all the 200 by this 6. So no, you are going to take the first 99 out of this. The first 99 out of this times 1 is going to give you 99 cedis. Then the second side will be from 100 to 149, right? So now 99 minus 200 will be left with 101, right? So 101, 101 minus 49. Sorry. So from 99, from 100 to 149 is going to give us 49. So 49 will be multiplied by 2, which is going to give us 98. Then the remaining one, which will be from 150 to 199, which is another 49, right? Which is going to be another 49. We multiplied by 6. So let's assume that Let's assume 99 plus 49, 148. So let's assume that the rest that will be left is 52. The rest is 52. So let's assume it's multiplying the 6. So 52 times 6. 3, 1, 2. So you are going to add all these 99 plus 98 plus 312. You're going to get a basic salary of 549. So you see, take the first one, then you multiply by the rate. And second round, so you take it and then you multiply, then the rest will be multiplied by. So it will be like that, step by step, like that. So as we are seeing here, it said less than 100 output is this, and then from 100 to 149 because 150 is greater than it. So 100 to 149, and then now from this thing up to 200, which is this, is that's what we just done. Right. The advantages of piece rate, right? Because piece rate is more of output, output, output. One of the advantages is that it will help you what produce more in a situation where you only need output and you don't need quality, right? Then you are going to what use or apply piece rate. For example, block factories. Normally that's what they use. And then also um so equitable. It is more equitable than the rate system because wages are paid according to efficiency of each worker. It results in increase in production as every worker tries to produce more to earn more. It results in lower cost per unit due to the increase in production as fixed cost is spread over the greater volume of output. It requires less or strict supervision as the workers themselves have aimed to increase their production, right? Since they want more money, they don't even need to supervise them. They are going to work more by themselves. So one of the disadvantages are the system requires complex and long negotiation between management and workers for A rate and B for standard output hours. Any error in the part of rate fixer could be expensive to the firm. Management want to maximize production at the least cost. Workers also want higher rates. This could result in bad feeling between the two. Quality, then next one is quality of work is often affected as workers aim to maximize production. So since they want to maximize production, they don't really care about it. So pure water factories do the same thing, right? So they are also those who bag the pure waters are paid based on the number of bags they bag. So if they bag 10, they are being paid like this and the likes. So an employee who is paid using salary scale is non-hourly rated, nor non-output rated. Basic salary is paid using already prepared agreed on scale. I've explained this. The employee knows in advance what his basic salary is even at the beginning of the period, unlike the other two. So for the other two, they don't know how many hours they are going to be working or how many they are going to produce. But for the salary, the person can even use his salary as a budget because he knows what he will be receiving. Then incentive plan schemes. So incentive is a stimulation of effort. So incentive is the stimulation of effort and effectiveness by offering monetary inducement or enhanced facilities. Incentives plan to combine the good point of both time and piece rate system. Usually the incentives are bonus that is paid in addition to the worker's normal remuneration. The bonus is often called premium bonus. Incentives could be individual or group. So the principles for individual schemes bonuses. So if you want to be paid a bonus, right, then you are supposed to work lesser than the hours that has been given to you. So if in case you are allowed to use 40 hours to work and you use 36 hours, then the time saved will be what? Your bonus time. That's where the bonus will be applied on, right? So here, a standard time for completion of all jobs is set, which is the time allowed. The time taken is the time you use to complete the job. And the bonus is going to be the difference between the time allowed and then the time taken. And that's going to be what your time saved. So if your time allowed is greater than your time taken, then there is a bonus, right? Meaning that you've used lesser time, right? So it is important to know that incentive schemes relate only to bonus. The employee's basic pay is normal day rate or piece rate. The worker's total pay under an incentive scheme is wages plus bonus based on time saved. Therefore, where the employee's time taken is greater than the time allowed, there is no time saved and therefore no entitlement to bonus. There are basically three methods. This is the housing way, and then the row one, right? So the housing way, the housing, sorry, is just 50% of the time saved times the time rate, right? So it is basically going to be wages plus 50% of the time saved times the time rate. While the hasty way is just the same thing, but just 30%, right? It's basically the same thing. Housing is 50, the other housing way is 30%, right? Same thing. And then row one is basically like this: time saved, time taken, times time rates all over time allowed. Not sure we'll really be using it like that. So when time saved is less than 50% of the time allowed, row one method pays a higher amount of bonus than housing. The housing, sorry. After 50% of time saved, policy plan pays higher amount of bonus. It must also be noted that Taylor, merit, and Gantt differential piece rates are all incentives plan. We move to group incentives. So with group incentives, did we even talk more about this in class? Not sure. The schemes are so far. So group incentive is more or less like where work is being done in groups. So basically like um, mining operations, right? So mining, those who mines are normally working in groups or like refineries. They are normally working in groups, right? So their incentives are also to be calculated in groups. So where production on continuous production line basis so extra that production depends upon all employees increasing their speed. Where teamwork is necessary, for example, mines, and where it is not possible to measure the performance of each worker. So a group computation of rewarding efforts under group incentives falls into the two parts. Finding the group bonus depends upon the scheme selected by management and can be group or savings on cost targets or any form of incentive. So basically, yeah. So labor cost accounting. This accounting treatment of labor costs as generated by the payroll involves analysis and classification of the remuneration into direct and indirect. I've spoken about the direct and indirect, that the direct is really needed for the particular product to come into existence. And then the indirect is more or less like not really attributed to the product. to generalizing and posting of direct and indirect costs to accounting books. So there are two types of labor costs. These are direct and indirect. Direct labor costs. I've said that this is the wages paid to employees who are working directly on the materials and altering its form or construction. Right? I've spoken about this. Indirect. This is the wage of employees whose time cannot be measured or identified with specific job or product. Right? So for example, can be supervisor, cleaner, and the likes. So okay, maintenance, engineer, or truck driver in production department and etc. So the wages, all right, okay. So the wages of the indirect worker is classified as overhead expense. So after this, we are going to treat overhead, and we are going to understand it more. So and spread all over the unit of goods and services. It's important to note that all labor costs are eventually charged to cost unit, but where direct cost is charged directly to the cost, indirect labor cost is spread over all units produced. So basically what this means is that the normal direct one is being charged to a particular unit, even though the indirect will also be charged to a particular unit, but it is being spread to all the product that has been produced. There is some table here. So idle time. So idle time is basically the difference between the time for which a worker is actually paid and that for which he actually spend on production. So the time that you are being paid and the time that you didn't really do anything. It represents the lost, it represents time lost by a worker who is paid on time basis. For example, if you are working as um as a shop attendant and then you've gone to buy food and a customer came around, right? So the time lost when you went to buy food is the idle time. And let's say you are, let's say a prepaid vendor where you normally use electricity to do your business. And then now you do light, there's light out. You are just there, people will come and you will not be able to serve them. It's what? An idle time. It's obtained by comparing date time and job card time. So some of the causes are machine breakdown, power failure, waiting for tools or materials, waiting for work, waiting for instructions, lackadaisical attitude, then maling training, so then success. So there are two kinds of idle time, normal one and then the abnormal one. So normal one, this is the labor time that is closed because it cannot be avoided and has been borne by the employer. So basically, uh, this is like something that cannot be what's avoided. So we have time spent on certain machine. Before you are coming to work, they were setting up the machine, right? And you were just there. It is not your fault. Then time lapse between completion of job and commencement of the new one. For example, if we can even use this as an example, if you have double classes on campus where you have one at JQ and you have one at business school, and the next one is just after it. So let's say you close 1:20 and you are supposed to start the next one at 1:30. I'm going to walk from business school to JQB. Basically, there will be a time lapse there because before you get to JQB, now it's almost 12:40 or so or 1:40, right? Then you've spent like more than 10 minutes already. Then attending to personal needs, tea breaks, rest intervals, and the likes. Then time taken from gates to departments in which the worker is engaged. Then abnormal one. Abnormal one, this is that idle time rates arise due to reasons not the usual routine of production, therefore has to be borne by the employer. It is time lost due to breakdown of machine. Then strikes and lockouts. Time lost waiting for tools and materials, then accidents. Abnormal idle time is attributed to defective planning, inefficiency, or bad work. Payments should therefore not be included in product cost, but be treated as period cost, charged to profit or loss account. Overtime occurs when a worker works beyond statutory working hours. So now let's move to overtime. Sorry. So overtime occurs when someone works more than the normal working hours. So if you are told to work 30 hours and you work more than 30 hours, then there is an overtime, right? So overtime premium is therefore the extra amount over the above day rate earners paid to an employee who work longer hours. So if let's say your overtime rate is what? Time and a half. Then and a half, the half becomes your premium. The normal one is the time, but the half becomes your premium. So it can be time and a half or double time. Example, if normal time is 2, and time and a half is 3, right? And then double is 4. So the one that has been added to these two, which is the time and a half, will become your what? The one becomes your overtime premium, the premium. And then here to the 2 becomes your premium. But overtime cost will just be the time and a half times the overtime being worked, right? So keep that in mind. So normal wage paid to overtime worker is charged to the cost unit as direct cost. So the overtime premium is charged differently under different circumstances. So we charge overtime the job as direct cost when the overtime is worked at the request of the customer due to urgency of work and customer agrees to bear the entire charge of overtime premium. So let's say you have a wedding to attend, let's say tomorrow. No, let's say 2 days from now. And you go and then see a seamstress and then you want the seamstress to finish your attack for you instantly, right? Like as soon as possible. And then the seamstress normally charge 80 cedis. And then say because you want him to work fast for you, then I'm going to charge you 120 cedis because I will need to forego other works and then pay full attention to your own. And then you pay that particular amount. That becomes what? The overhead being charged to as director because you, the customers, agreed to pay that one. But when we want to charge it to overhead, that is when there is general pressure, right? The works have become plenty on you. So you are staying back and then the work, the customer is not going to pay the amount. It's not going to pay for you overworking, but you want to complete your work in time. So you are staying over to overwork, right? So charging to profit or loss, treated as period cost. Overtime is required due to abnormal factors like power failure, fires, earthquake, or due to planning or fault management. Should be treated as period cost to be charged to the profit and loss account. So leave with pay. Workers by legislation or collective agreement are entitled to specified leave with pay for a specified number of days. So each and every year, workers are entitled to some number of days to take off as breaks or as some kind of leaves, right? And they are supposed to be paid by that. So those particular times are being paid by the employer. So they should be treated as what? Indirect labor costs and charged to overhead. So holiday pay, holiday with pay. We know that during each and every year, we have some number of days where there are holidays. With that one too, the cost being incurred in those days are supposed to be charged to overhead. Employment costs. These are costs which are incidental to employment of the worker. Social security, pension scheme contribution. These are fundamental parts of acquiring labor service. The day rate should therefore be inflated to allow for these costs so that they become direct costs to be charged to cost units rather than being treated as overhead. The difference between the guaranteed day rate and the piece rate and the guaranteed day rate, the difference between them should be charged to overhead. These are all something that we are supposed to note down. When we start solving questions, you will see how we are going to apply them. Then labor turnover. Labor turnover is basically the rate or the change in workforce in a particular organization, right? So how people leave the organization and how people come into the organization. So cause of labor turnover. The causes may be grouped into two broad categories. We have avoidable ones and unavoidable ones. So avoidable ones can be of um, let's say low remuneration, poor working conditions, and the like. So for the employer to avoid this, he can what offer good remuneration and then good working conditions and the like. The unavoidable can be death. If someone dies, you cannot do anything about it. And let's say some people can it can be some form of punishment, and then some people can also what get married and then leave the job. They are all unavoidable. So this is it. So poor working conditions, unsatisfactory working conditions, inadequate jobs, job security, and then poor working relations with colleagues and superiors. That is the avoidable ones. Then unavoidable ones, death or retirement, illness or accident, discharge or disciplinary ground, marriage, particularly in the case of women workers. Now, because of labor turnover, while a certain amount of labor turnover is accepted because it always takes place, high turnover is expensive, leading to increased cost of production. The cost of turnover is classified into three: preventive cost, replacement cost, and others. The preventive cost, these are costs incurred to keep the workforce satisfied and to prevent them from leaving. So that's when you provide good working conditions for them, cost of welfare, so canteen, transportation, medical, and etc. Then uh, cost of labor union activities to promote good worker management relation. Then others can be of granting of loans for housing, car, and etc. at lower interest rate to them at open market rates. Right? So the replacement costs, these are the cost of replacing or leaving the workforce and other attendance costs. So basically, the cost of bringing new people into the job. So it can be cost of filing for vacancies, which is you are going to print, do adverts and the like, advertising, interviewing, selection, clerical time and engagement, and its attendance paperwork. So loss of production due to time gap in the training of new worker, the inefficiency of new worker, the cost of training new employees, then increase in cost of production due to increase in defective products and scrap due to inexperienced workers because they are new, they are inexperienced, and then they can they can produce bad products and also cause some scraps. And others include low morale of height, and so people leaving the job will what? Be like, before you quite jai, they means jai because as a human also. The cost of meeting end of service benefits. Since high labor turnover can be costly to the organization, it's important that it is measured and reported on regular basis. So measurement of labor turnover. So management can use the rate of turnover to compare different periods of the organization and between organization, analyzing the causes for remedial action. There are three alternative methods for measuring labor turnover. However, once one method has been selected, it should be used consistently to facilitate comparison. We have the separation method. This method takes into account only those workers who left during a particular period. It's calculated as number of workers left during a particular period times 100 all over the average number of workers. So average basically means that those who came in plus those who went out divided by 2. Replacement method. This method takes into account only those new workers who have joined in place of those who have left. So it is computed as the number of workers replaced during the period times 100 all over average number of workers during the period. If new workers are engaged for expansion program or any such purpose, they are not considered for this computation. Labor-related issue. That flags method. This shows the total change in the composition of labor force due to separation and replacement of workers. So it is computed as number of workers who left plus number of workers replaced times 100 all over average number of workers. And we're speaking about average number of workers being the number of workers coming in plus number of workers going out divided by 2. The merit rating and job analysis. Merit rating is a systematic and orderly approach to assess the relative worth of an employee working in an organization in terms of his job performance, integrity, leadership, intelligence, behavior. Merit rating is commonly referred to as employee rating, employee appraisal, or staff reporting. A job analysis is the process used to collect information about duties, responsibilities, necessary skills, outcomes, and work environment of a particular job. Or job analysis is the process of studying and collecting information relating to the operations and responsibility of specific job. So this comes to the close of this session. This is actually 79 pages slide. That's why I've really kept long like this, and I've really not, I've brushed on some stuffs. Those that are really, and that's what I tackled on most. But if you find, or if you have any questions, you can drop it in the comment section and I'll be there to explain further to you. Thank you very much for your time and see you some other time. Bye.